Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Train to conduct the Monday edition of the market recap. Now, what an absolutely amazing trading day it was today. It was just bulls literally dominated the marketplace from start to finish, and it really started happening earlier this morning. But kind of see at this level here, the marketplace actually held that support level at the 1240 mark. Now, one thing to keep in mind though is let's track this over the last couple of days, and let's pull up the spiders, for example. On the spiders, when we look at the day chart, you do not see Friday's edition of the marketplace because the market was actually closed, and so you didn't see any downward movement on Friday. You only seen kind of a gap down today, and then it comes right back up. And if you want to pull up an intraday chart here, you can kind of see, okay, this is Thursday's close, and then it gaps down in price. And what really kind of created this movement here was the unemployment report, where we had literally one of the worst unemployment reports we've had in years and years and years, when we only had basically, I believe it was about 130,000 new jobs created. And if you actually look at the breakdown of the jobs coming into the unemployment report this previous Friday, and once again, the unemployment report is reported every Friday, the first Friday of every single month. Well, looking at this current breakdown, basically in this latest edition, you had 4,000 lost jobs in 16 to 19-year-olds. You had 291,000 lost jobs in 20 to 24-year-olds. You had 64,000 lost jobs in 25 to 54-year-olds. And then you had from the 55 to 69-year-olds, you had a 329,000 gain, which means the only demographic that we tracked that actually reported some degree of a gain in jobs was people who should be either nearing retirement or in retirement. And what's happening is because the Fed has had such a low interest rate for the last 8 years, these savers who were supposed to be nearing retirement, they haven't made any money. Their retirement accounts haven't made any money in the last 15 years, and so now they're just not prepared to go out to retire, so they have to go out there and get another job. And if you look at actually the unemployment report over the course of the last, from 2007 to really 2015, you have 54 and younger, which is your prime demographic, 1.2 million lost jobs over the course of the last 8 years. And in that same time period, 55 and older, you've had 6 million more jobs created, with a grand total of 33.1 million participating in the labor market that should be nearing the age of retiring or retiring. And so when we got those numbers on Friday, you saw the S&P 500 as tracked here on the ES contract. This is your unemployment numbers that you had on Friday, and look at that move it to the downside, because it really was a very, very negative number. But like we've talked about in prior videos, it came right into that 2040 level of support. It held that level of support throughout the market open on Sunday night, and then as the marketplace started open up at 9:30 Mountain Time, 9:30 Eastern Time, you just came off, 2040 went up about 40 handles off the lows from the unemployment report, and basically recovered all of the gains that it had prior to the unemployment report coming out. And so really good day for the bullish traders out there. But what was really kind of interesting to me is basically, the marketplace ended up only about less than 1% up. It actually ended up when it comes into the close on Thursday versus the open today. But in the marketplace, you had just an absolute ton of companies that report better, up 2% or higher. Companies like Apple up 2% or higher. ConocoPhillips Energy had an absolutely amazing day today. ConocoPhillips up 2% or higher. eBay up 2%, GMCR up 2%, Monster, 3M, Hewlett Packard, Halliburton, Netflix, Micron, Microsoft. Those are just to name a few of the companies that reported that came in 2% or higher on the day. And like I said, just bulls absolutely dominated dominated the trading atmosphere today, and that was interesting. But what was really kind of interesting to me was not just the movement in the market. We had some absolute random movement in the currency market. If you look at the dollar index here, the dollar index, okay, this is the unemployment report on the dollar index, and obviously the dollar got just absolutely smoked on the report, down more than 1% after the unemployment report came off the lows all the way down here. And I've been calling this 97 level a very important level of support for a very long time. But all of a sudden, look what happens here at it was about at 1 o'clock my time, 3 o'clock Eastern Standard Time. All of a sudden, the dollar moves up close to like 0.5% on absolutely no news. And if you track it on the euro dollar here, it was absolutely fascinating to see the euro get absolutely smoked, and that's on a 15-minute chart. But let's put it on a 1-minute chart. Okay, so here we got all this support level right here. Right under that level is stop losses, and so look at this movement here as you're seeing it. Now this is when that happened. Boom, 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 boom. That is a 60 pip movement on the euro dollar to the downside, and there was nothing out there that was really creating it. There was no information, there was no economic reports. It literally is one of the slowest time periods in the currency market because you only have the US banks open, there's no economic reports, there was no news coming out of Europe. Literally nothing is happening, and it just absolutely and again, this is a 1-minute chart. 1 minute goes down 60 pips. What causes that is what we consider a mini flash crash. It's when these computer-based algorithms, like the ones that are traded at Citadel and Virtue and whatnot, they have these algorithms, and they literally take out all of the stops, driving the prices down low. Now obviously I'm short euro, I'm short pound, I'm short yen, so that helps me. But it also is very frustrating when we have to deal with this in 2015, and it is just part of the overall market cycle. Now it's just part of trading in 2015 that these computer algorithms will drive prices very, very fast in a very short time period. And so now the euro in terms of its intraday chart, definitely in a bearish downtrend on the intraday level. Another thing to keep in mind here is gold. Gold, obviously traded off at the towards the end, but look at the open back here of yesterday. The opening price literally went from 1200 all the way up to 1215, got a 15-point gap on the opening on Sunday night. And so after that, then the futures market just kind of just hovered out, hung out. I think it was a little bit of an overreaction to gold and silver had the exact same thing. But here on crude oil, fantastic day on crude oil. Let's look at the on the daily chart, just kind of analyze crude here. Looking at the daily chart, up here nearing resistance areas at the 53, 54 level. It's currently at 52. It still has some upward movement in there, over close to a 6% move on crude oil today. Fascinating day on crude oil, obviously, for those of us that are selling put options on crude. Definitely one of those days where I actually locked in profit. I had sold contracts on USO, and because of today, I was already profitable. Already pulled out 80% of the liquidity that I could on the trade on the naked put. And so what I did was I just basically bought back the options at 20% valuation, and then resold the exact same month. I still had 38 days or something left in the trade, captured 80%. A lot of it was just based on today's price action. And so basically I resold those at a different level. So I think I sold the 16 contracts. I had sold the 15 contracts back here. So crude had an absolutely fantastic day today. Gold had a great day today. The market had a great day today. And the currency market really kind of just more neutral than anything else out there in the currency market. But again, what really the leader behind this entire movement in the S&P 500 is a belief. And what that belief is, and you can see the day today, what that belief is that because the U.S. economy is struggling so mightily right now, all the economic reports are coming in just very, very negative right now. There's a belief that because the marketplace the economy is kind of crashing, the Fed is going to maintain low interest rates. Now, if that doesn't mean we're in a bubble, I don't know what else does, ladies and gentlemen. That evidence alone, the market going up, what it did today and having the fantastic day it did today, is pure bubble related marketplace. And at the end of the day, I think there is a mistaken belief, and I've talked about this in the past. There's a mistaken belief that the Fed will not raise interest rates. It is my assertion that the Fed will raise interest rates because they know the market is going to crash and they'll have to quickly lower the interest rate. In fact, going into a negative interest rate and then starting QE4 in about a year and a half from now. So we'll see if that philosophy, pans out over the course of time. But until then, we're going to go over there to tackletrading.com and making money one trade at a time. Get in the game with Tackle Trading. We'll help you understand all this price action on a daily basis to make sure you're not caught off guard like many other people in retirement accounts will when this market does come back to some degree of correlation to some semblance of reality from an economic perspective. Matt Justice for Tackle Trading. Check us over there at www.tackletrading.com.